What's happening, everybody? Happy Wednesday. Welcome to the All-Star Charts live strategy session for our Hot Corner notebook. So what we do here is we talk about all the latest insider activity, and then we'll go through some of the more macro developments or technical developments over the past week. So we're here every Wednesday, get through this disclaimer, and then jump in. So nothing we discuss here today constitutes any solicitation to buy or sell securities, solely for informational purposes, not to be construed as investment advice. For more on our disclaimer, head to allstarcharts.com/terms. This is really the chart right now. This is really it. We had our analyst meeting this morning, and this is one of the big takeaways. So we have big levels here, financials in the Russell 2000, some other indexes as well that we could use as, guideposts right now. But what really stands out is, there's a saying we have as technicians, which is the more times a level is tested, the more likely it is to break. If you look at this chart of small caps, right, we have the former highs here from 2018 and 2020, and we're just knocking on this level over and over and over again. This will be now the fourth time since second half of last year, right? So how many more times can bulls come out and defend this level before sellers take control here? I don't know. I think we might be on our last leg. When you think of just how similar this small caps chart looks to financials, well, it makes sense because there's a lot of financials and small caps. There's also a lot of banks. The banks are the laggards right now, of course, right? Been that way for over a month now. When we look at KRE, we have distribution, right? This is the regional banking index. Big distribution pattern here that just broke lower on the Silicon Valley Bank news last month, right? So we had, huge follow through to the downside, fast too, big and swift follow through. And then this is simply a continuation pattern. One thing we know about continuation patterns is that they tend to continue in the direction of the underlying trend, right? Or they tend to resolve in the direction of the underlying trend. I threw a 20-day moving average on this chart just to make it abundantly clear, which direction that is, and it's lower. So what are the implications of this chart or of the banks resolving lower from this bearish continuation pattern? I would imagine that financials are breaking below this 30-50 level, right? So this chart is just a zoomed out version of this one, right? This is the same level, 30-50. As if it doesn't show you just how important it is here with these 2018 and 2020 highs. Well, we could zoom out to the financial crisis to really make this point and drive it home. This is polarity at its finest, right? Former resistance stopped here, rolled over, stopped here, rolled over, stopped here, rolled over again in 2020, just before the COVID crash. We finally took it out. 2020, 2021 kept rallying. And now we're coming back, testing it from above now, right? So this former resistance has turned into support. If this bearish continuation pattern in the regional banks is to break lower, it would be hard to make the bet that this 30-50 level is still holding, right? Why? Financials are made up or comprised in large part by the banks. So where regional banks or the big money center banks go, XLF probably follows. Now, if XLF is following and breaking this level, by extension, this chart of small caps that looks so damn similar is probably breaking this key resistance level too, or support level, right? If these zones start to break, we have to anticipate further downside, heightened volatility, more selling pressure for risk assets, probably more bond market volatility, right? These aren't good things that we're talking about. Again, this is the level. XLF, I don't want to see it below 30-50. I think things get a lot dicier there. And we would want to take a much more cautious stance if these big levels do start to break. I think it's very likely that these will all happen together, which is why I think it's a nice sequence going through these charts one by one, and then likening banks back to financials and financials back to small caps, right? And then small caps, just to be clear, this Russell 2000 index really is probably the best illustration we have from any of the major averages of what most stocks are doing, right? Because it really removes all of that cap weighted large cap effect that the other major averages have. Small caps probably give you the most accurate or most fair representation of what the broader stock market's doing. Don't want to see those prior cycle highs violated. Also, I spoke a lot about bond market volatility just in recent weeks, right? Bond market volatility that accompanied really all these bank blowups, and also the rapid collapse in short-term rates. Things kind of chilled out the past week or two, but now it looks like these key levels are being tested again. So this is a U.S. 10-year yield testing its pivot lows and also its 2018 highs, right? So if these levels break, this 3.25 level in the 10-year, probably see yields continue lower from here. This would probably be the peak. I would imagine this would be pretty nice confirmation, these 2018 highs breaking, that rates have peaked, right? And then we have to just be very aware of all of those intermarket implications, right? I don't think it's a bad thing necessarily if rates start moving lower again. We don't want them to collapse lower, right? That will bring on some volatility for risk assets. Sure, if they just want to start trending lower in an orderly fashion, and we want to start talking about things like tech stocks and growth stocks, which probably continue to work in that environment, right? Bonds probably continue to look nice too. Maybe we get interested in utilities, right? As yields really come down, you'll typically see these more bond proxy sectors like utilities and staples catch a bit. So this is just something more to be aware of the intermarket implications. I'm not saying if this level breaks, it's a disaster for risk assets. In fact, it should be a tailwind for a lot of them. We just don't want to see, this level break and then get some sort of, big momentum to the downside. That would typically bring on volatility for other asset classes. All right, let's jump in here. So let's just touch base. Occidental Petroleum. We talk about it a lot here. I know a lot of you guys own it. So let's follow up, right? This is the table that we always like to show, showing all of the purchases that Berkshire has made in Oxy over the trailing 12 months or so, 13 months now, right? First filing was literally 13 months ago in March of last year. So Buffett owns about a third of the outstanding shares now. I think his stake must be close to 20 billion by now. It's just massive when you include the warrants. This is the chart we showed last week, right? So I just want to drive this point home. Why we continue to like buying Oxy against this support zone, against what we like to call, right, the Buffett zone right here in this 57.50 to 60 level. This was last week, came in, saw handful of filings since we've been around this 60 zone. This is us this week. Oxy is pulling back a little bit today and yesterday, but this is coming into this week, right? So again, Buffett comes out, puts a floor in the stock. He's literally support in this name. And we're getting a nice move. Again, already 10, 15% higher off of this level. So again, this is how we're playing at 57.50 with a target back towards 88. Just want to follow up on energy more broadly. Last week, I think I made some cautious comments about how if XLE or crude oil are breaking below these 2018 highs, notice how much we talk about the 2018 highs? It must be important, right? Critically important. So if energy or crude oil were breaking below those 2018 highs, which we thought was likely to happen together, and it did last week and the week before, or the week before last, right? That would carry some very bearish implications and warrant a more cautious approach toward all energy assets, right? Energy futures and energy stocks. Bulls came out over the trailing week and a half, 2 weeks now, and really repaired that damage, right? So was this just a little failed breakdown, a little bear trap at this former resistance turn support? Sure looking that way for energy right now. So do we want exposure to energy? The way we answer that question is, are we above or below the 2018 highs? Okay, right now we're back above them. So is crude oil, right? So back above the 2018 highs. Okay, want exposure to energy. How do we want to play it? Occidental Petroleum against 57.50, 60. That's the playbook for us for energy right now. Okay, moving to alternative energy. A lot of the charts from this week, we also had last week. And that's because when I was going through today and looking for the best setups, we're getting weakness over the very near term, really just over the past day or two. And a lot of these charts that we talked about last week are pulling back to our risk levels, and I like them a lot. These are our leaders, the ones I'm going to talk about today. First Solar, this thing's been moving in a near vertical line higher in a period while the broader market has not been doing great, right? So we're back above our primary target of 200 and now targeting those former all-time highs from, oh my goodness, look at that, like 25 years ago at 316. So First Solar above 200, targeting 316. Guys, if you have any questions, I am watching the YouTube chat. It's a new thing that we're doing. So I will try to answer your questions, in real time. If you have them, hit me up in the chat. I'm watching you guys. All right. So let's talk about Wingstop, fast food. I mean, I'm seeing new highs from McDonald's, Wingstop. Something's working in this group right now. The consumer must be okay. So Wingstop, what a nice base we have. Did get a big sell-off yesterday. We're trading around 178.50 today. So we only want to be long this one on strength, call it 187, but that's really just the top of this range that we've been in. So 187 is a really clean level. You can zoom that out, and you got the 2021 highs there as well. Wellington Management, one of my favorite hedge funds, is also very involved in the name with a stake of over 10%. That's from last summer. So above 187, target of 261 in Wingstop. General Electric, talk about a nice base. This is just a textbook base. You got the downtrend, you got the sideways basing pattern here, and now we're breaking out. You got the pivot highs here. So call it 90. We're trading just above there today, 93, 95. So above 90, we like it long towards 135.50. And industrials really are pulling back a bit this week. So I think you might get a chance to buy GE closer to our risk level. Patient. Standex International Corporation, that's SXI. We have another passive investor in this one with a 5% stake. That's Copeland Capital Management. And that was from just a few months ago. So SXI, we have a nice clean level here at the 2018 highs, about 114.50. Pulling back to right around there today. We're at 114.70 as we speak. So what a great entry we can get in SXI today. I do like this one a lot. Do want to be careful and just throw out there that earnings are coming up in early May. Happens fast. We're at that time of year again. So another earnings season really kicks off, starts next week. It should be next Friday. You'll get a handful of the big banks, and Wall Street's going to be watching those reports very closely, considering the events that have taken place since just last month, right? So SXI above 114.50, got to be long, target 162. Like that one a lot. Cirrus Logic, not many better places to hang out right now than semiconductors. Getting, a big pullback in Cirrus just this week, down big every day this week, continuing today, down another 3.3%. But what that's done is it's brought the stock from about 110 back down about 10% to right around our risk level of, we have 103 stated here on the chart, but I'm looking at it right in front of me. Really, you could bring that level down to 100, 101, use 100, nice round number. I think that's fine there. So we could have lowered this down to about 100. Called 100 in Cirrus long with a target of 129. Mackenzie Financial Corp is in this one, another passive investment stake. Duolingo, language app. Durable Capital Partners is in this one. Form 4 filer, Form 13 filer as well. So above 140, already had our first target hit. We are pulling back a little bit today. So we got as high as about 145 on this one last week, pulling back to about 136 today. So get in on strength, let it consolidate here, digest some of these gains, because this one has really been on fire. It's more than doubled just this year. So yeah, back above 140, buyers on strength, target 205. Worthington Industries, WOR. Worthington Industries is, I believe this is a chemicals. No, steel. So right, it's a material stock. Big pullback also the last 2 days, trading back around 60 and change right now. We do have those 2018 highs when we zoom out, or 2017 highs when we zoom out on the chart. Be buyers and strength back above that level. So called 62.50. I do like the way this one is showing, such impressive relative strength versus other steel stocks recently. So I do like Worthington a lot. Form 4 filer in this name. Let's be buyers on strength back above 62.50 with a target of 89. Cody Inc. They do makeup, household and personal products. So Cody, CEO and director, Form 4 filer last year. We're above these late 2021 highs of about 11. We want to be long. Really want this one on a little bit of weakness back towards that 11 level. Well, I wanted to bring it along today. Stock was above $12 coming into this week, trading around 11.70 right now. Let it continue to come in, find its footing, and then maybe build a position right here around 11. I like it. I think it does eventually resume this uptrend. It's been such a strong uptrend off the October lows. I got about a double since October in this name. Cody it's not a super large stock. Yeah, it's a mid cap. My eyes are terrible. I think I'm seeing 9.7 billion. So Cody, I do like this base. When you zoom out, maybe there's still some work to do. You do have some overhead supply zones coming up, but I think from 11 to about 14.34 is a nice safe bet. Not tremendous upside, but a nice chunk of change there. I do like this base for now, and it is a leader in its space. So Cody, the target 14.30. Let's check the questions. That's all I got for today. Unless anybody has anything for me, we can all move on with our day. So thank you, everyone, for joining. As always, any questions for me, shoot us a note, info@allstarcharts.com. And we'll be right back here, same time, same place next week. All right. Bye, everybody.